Okay, so last time we talked about buy side and sell side liquidity, yeah. So today we're going to be talking about range liquidity, internal and external range liquidity. Please pay attention to this class. Range liquidity is very, very important. Now, firstly, you need to understand that internal and external range, buy side and sell side liquidity is more like the major type of liquidity. Then inside buy side and sell side liquidity, that is why we have all this internal range liquidity, structural liquidity, blah 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 blah. But the two major type of liquidity we have is the buy side and the sell side liquidity. All right. Okay. So let's continue. Now, what is range liquidity? Range liquidity are liquidity found within what? Within ranges, just like the name implies. Okay. So this range liquidity actually depends on the type of trader you are. Actually depends on the kind of trader you are. Like um well mostly what's it called? For day traders mostly, their time frame has to be on the lower time frame. That's for scalpers. Then swing traders, you likely see them on the higher time frames. Yeah. So your internal and external range liquidity cannot be the same with a scalper. It is different. Which is why I decided to explain what range liquidity means. So that when you are looking at your charts, you are looking at your own range. A trading range is still the same thing as a swing structure, where we have this. This is what a range. Sorry, let me start again. Now, this is a structure. Higher low, higher high. How did I confirm this higher high? Do I really need to be repeating this? Because I'm pretty sure you all know to confirm a range high or a swing high, we need a change of character. That is price taking out the minor structure, sorry. And after taking out that minor structure, it forms what? Substructure that will now push price back into what? Into discount levels. This is our north trend. And when we get to discount level, what we will see? We'll likely get a change of character that will not take price back to here. So an uptrend. And so on like that, right? That is when price now takes us this high. So we have higher low, higher high, higher low, higher high. In a downtrend, we have this as well. Let's see. Sorry, we have this. Then price gives us what? Break of structure. And it pulls back again into premium levels, right? Changes character to give us what? To give us another break of structure. Let's just work with these two for now. Here, what do we have here? Lower high, lower low, lower high, lower low. So let's just work with this two structure for now. Now, looking at this structure, this is our low, this is our range low, this is our range high. What is a range? When you open your charts, you go to the higher time frame to mark key levels, blah blah blah. Then you go down to the medium time frame to mark your structure. This range now is now where you want to trade with. It's just like, let me use this live chart, for instance. Let me use an already one that has already played out. When I open the chart, let's say all these ones has not played out, it's just stopped here. When I open the chart and I'm able to first mark out my higher highs, higher lows, and everything, then I finally mark this place as my high. Yeah, then price change character here to mark my low, right? What am I doing? I'm marking this low and this high. This from here now, like this to this high, is my trading range. I have no business with everything that's happening here. I don't care if it has happened in the past. I have no business with that. This is where I'm focusing on. From this low to this high. Wherever price is on this level is now what is going to tell me if I should be buying or if I should be selling. Now, let's say we stopped. Let's say price recently just changed this character here. Good. Which confirmed this swing guy, right? Then we use our gambots. Measure it. We need price to come back, to come down into what? To come down into discount levels. So I'll start looking for areas where price will likely react from at discount levels. Oh, shoot. Fair value gap was supposed to come first before liquidity. All right, so you guys fair value gaps. Let me know in the comment section if we've talked about fair value gap in this class. Okay, good. That's enough. That's enough. It's a very simple topic. We'll treat that. All right. It's a very simple topic. We'll treat that. Now, looking at price is at a swing low and a swing high, right? We are looking at this place to trade from. Our gun box now is telling us that what price needs to come down below discount levels, and that is where we start looking for entries. Now, when you look at this discount level, we could see fine, we'll talk about fair value gaps later, right? But this is the only area that has a fair value gap that price will want to magnet to, and this is where I will be like, okay, let me be looking to take my trade from here. Price data came back to reflect to even take it. Yeah, this is the only place price might want to like respect at this discount level first. Okay, so but that's not the case. What am I trying to say here? What I'm trying to say is when I get my swing low and this swing guy, I am working with this leg, not the past, this leg. This is my trading range. So when you now hear internal and external range liquidity, it means internal. Every single liquidity found inside this range is what we call internal range liquidity. And every single liquidity found outside it, it's what we call external range liquidity. It's simple English. Internal liquidity found inside a range, external liquidity found outside a range. What is a range? This is my trading range from this low to this high. In this new case here, this is my range from this low to this high. Everything working, everything happening inside here. Everything happening inside here is range liquidity, internal structures. Okay, let's go to that textbook chart and use it. So I've explained what a range means, right? So now from this low now to this high is our range. Price has not broken structure. These small eyes inside it is what we call minor structures, remember? And this downtrend is what we call substructures. Yeah, good. Now, every single liquidity found inside this low, found inside this range, is what we now call internal range liquidity. And understand the way price move. Price is going to take liquidity from the internal and deliver to the external. That is, price is going to take liquidity from the internal range to the external range, both in an uptrend and a downtrend. Just like how price is going to, just like how in an uptrend, price is going to take liquidity from the sell side before it decides to go and take liquidity in the buy side. What type of liquidity is it taking? Internal range liquidity first before external range liquidity. Now, what can we call what is an internal range liquidity? Every area, every liquidity levels inside this range. Now, what is liquidity levels? Don't forget potential areas with a lot of buy stop, with a lot of stop orders, right? So everyone longing from this point, somebody that is longing from this minor structure here, this is where the stop loss is going to be below here. That is all the buyers, their stop loss will be below here. Buyers are longing from this point, their stop loss will be below here as well, right? Buyers are also longing from here, their stop loss will be below here. So 1, 2, 3, 4 are inside this range. 1, 2, 3, 4 are inside this range. And what will happen? Price is going to take this internal range liquidity first. They are all sell side liquidity, right? Price is going to take them all out first. And when price is pulling back to give us an higher low, what is it doing? It is taking out internal range. It is taking out what? Internal range liquidity. Now, don't forget that inside this same range, okay, before that, when it has taken out internal range, what is it going to do? It's now going to do a change character and start going up. As it is going up, what is it printing? You know, when it was coming down to take out this minor structures liquidity, this internal liquidity here, it is printing another structure. And what we price has to take them out. They are also internal range liquidity, right? They are also internal range liquidity. As it is coming down to take out this liquidity, it is printing this trend line. Look at it. It is printing this trend line. And after it has gotten to this strong protected low and it respects it, changes character, breakout, retest, what is it going to do? It is targeting this trend line liquidity above here. It needs to take out all these eyes, because everybody that is selling, people that are selling from this point, their stop loss above here. Those that are selling from this point, their stop loss above here. Those that want to sell from here too, their stop loss above here. Here too, their stop loss is above here. So this move is now price going to do what? Clear this liquidity. Now, this is a trend line liquidity. As it is inside this range, it is also what? An internal range liquidity. These different types of liquidity that you know, equal highs, equal lows. If you see an equal high here, price can form an equal high here, right? It is an equal high liquidity, that is double top, that is you see two equal highs. It's a liquidity level, right? It is still inside this range. You can still generalize it as internal range liquidity. So you have to be wary of of internal structures, especially, so that you're not going to be trading from an internal range liquidity. What do I mean by that? Now look at this. Let me create something here now. We have this I, right? This I gave us this low. Okay. Now this low, now price did something like this. Now you have this. Right? Potential area. Most people want to be buying from here. This change of character you see here is not the move to push price upside. It is just price taking out this internal range. That is most people that want to sell from here. Price started to take them out before continuing the selling. Now, all those that wanted to buy from here, what will price do? Price also took them out. You might be like, this is a solid structure. This is an internal structure. This is what? An internal structure. So this change of character does not mean price has already pulled back enough. It wants to continue going. It wants to now start doing what? It wants to now start going up. This change of character, this particular move right here, might actually be that price decided to take this one out to mitigate this point before continuing selling. So when you see moves like this inside a range, you really have to be careful, because everything inside that range is mostly noise and internal. And internal structures are mostly full of liquidity and noise. Why do I say so? You have higher, you have this low, you have this high. But when you look inside this internal structure, you will be able to count at least 5 to 6 lows and 5 to 6 highs inside this one low and one high. That's just sometimes people will be like, zoom out a little bit, zoom out of the noise. Some people will be like, there was a time, I think I was one that posted that around last year, and I'm like, zoom out to the higher time frame to see the rubbish you have been trading. You might just be there inside the lower time frame, trying to cash. Okay, you want to short from here, price took you out. Okay, you want to long from here, price take you out. Fine, you want to short from here again, you still see price. So the price gave you a low and a high and decides to consolidate for a while before actual moving. But you are there catching every single long candle and short candle. Price can also do something like this. Give you this range low, this internal low here, take it out. This internal high here that is supposed to be strong, you see still price, take it out. Then this one is going to be the next strong one. You still see price, take it out. Price can decide to be crazy, to do something that's going to confuse you. All you have to do is zoom out to that particular range and wait for price to just either come to the range low or range high. So every single move inside this range low, inside this range, this low and this high, is what we call internal range. Then when price has completely taken out this internal structures, after it has taken out this minor structure, it's now going to move to take out this trend line. That is this substructure. All those liquidity there are what? Also internal range. The when price has completely taken it out, what is it going to do? It's going to give us a new high. And as it has given us a new high, this is the external range. The external range now is this range high, this swing guy right here is the external range liquidity. It is outside the range. This is now what we call external range liquidity, external range liquidity. So the market structure is going to help you understand the particular external range liquidity that price is going to protect first. The particular one price is going to take first. So since we are in an uptrend, we should know that when price takes out internal range, it's going to take out the external range liquidity above. If we are in a downtrend, when price takes out internal range liquidity, it is going to take out the external range liquidity below. It's as simple as that. Let's go into the live chart. There is no need to talk too much about this, all right? Now, looking at this example that I said earlier, right? This is our range low, this is our range high. Now, look at this. What do we have here? We have this low that gave us this high. Price change character, took it. Everybody that is trying to long from here now, price has taken them out. Internal range liquidity. This is another low. Don't get me wrong, people bought from here. Trust me. This is another low. Look at these rejections to tell that people bought from here. What did price do? Price took them out. Their stop loss was below this point. Price has taken them out. Next one, we still have this one here. You still see candle rejection, right? Look at it. Somebody bought from there too. What did price do? Price took them out. Next, we still have this base here. What did you see price do? Price took them out. They are inside this range, right? Now, when price has successfully taken out all of them, remember, as price is taking them out, it is forming another one. Now, uninformed traders did not know that price has tapped into a major level here. This is the last high that gave us the previous low, right? Most of them will not be like, yes, let me short. Price is good, is in a downtrend. It is taking out lows. It's in a downtrend. And these are the shorts. Still trying to trade internal structure. Price did what? Took them out. Those that will be like, if you are shorting from here, you are shorting early. This is where we should short from. Here. Where would they place their stop loss? Above here. What will price do? Take it out. Then those that still did not understand that we are in an uptrend, they want to trade from this swing high. Then where will they place their stop loss? Just outside the range there. That is the external range liquidity. Those that want to trade from this swing high, they will place their stop loss just outside this range here. Because of this change of character, blah, blah, blah. And they'll place their stop loss here. What will price do? Also take them out to give us what? A new higher high. And when price has done that, price has taken what? Liquidity from internal range to external range, uptrend. Let's look for a pair that is in a downtrend. Look at it, taking from internal range to external range, uptrend. Now let's look for a pair that is in a downtrend where price took out liquidity like that as well. Okay. This is also another example of an uptrend where price took liquidity from internal range to external range, right? I think it started from this particular one starting from this low. This one pulled back to discounts. This one pulled back to discount, and this was the last discount area. We've backtested this pair before. So it was from this point to this high, right? Good. Now this is the low that gave us this high. People wanted to buy from here. Price already changed character here to pull back into discount levels. Don't forget. We confirm our swing guy with this change of character to pull back into discount levels. Then many of them are other block traders. This is where they want to trade from. Other block. And it is another. Okay, buy. Change of character has happened. What did you see price do? Take them out. Okay, this is the inducement. Sorry, sir. Let us buy from here. This is the main low. Still at premium level. What did price do? Take them out. Okay, let's buy from this point, right? What did price do? Price still took them out. All these lows you are seeing are internal range liquidity because those that try to buy from here, stop loss below. Those that try to buy from here, stop loss below here. Those that are trying to buy from here, stop loss below here. And after, okay, price respected this one, price respected this one. So this was where price decided to buy from, right? Now, after price bought from here, don't forget, the move that led to clearing this liquidity also printed its own liquidity. How? Now, this is it. This is the last low. Look at it. This is the last low now that led to that mitigation. Let me remove this. This is the last low, the last high that led to that mitigation. Now, gave us the change of character. This change of character is not telling us that what price wants to change from this downtrend to an uptrend. Don't forget, this is the range high. This is where price needs to take out to give us a new higher high. But some people are still lost in that liquidity, are still lost in this structure, believing that because of all this break of structure, gold is bearish. So you see them, somebody wants to take a trade from here, stop loss here, just above here. What the price do? Take them out. Somebody wants to take a trade from here, this high, stop loss, just above it here. What the price do? Take them out. Somebody wants to now take from, okay, let's say this is the break of structure. So this is the swing high. Somebody decides to take here. Why will somebody want to trade from this high? Because this high pulled back to take out this strong low according to them. But this is an internal range. This is the main range low, not this one. So most of them might be like, gold is bearish and this is where I want to sell from. After this break of structure here. So this is the range high. Extreme points is very, very important. So we want to buy from this high, right? So we want to sell from this. We want to sell from this high because of what? Because of this strong break of structure here. Don't get me wrong. Any Most of them, they are kind of like, it's kind of like basic knowledge. It's what they saw on YouTube. It's not really their fault, right? Most people don't even know that. Trust me, most traders don't even know that. So confirm a swing guy, you need to see a change of character of price taking out the minor structure. Some people don't even know that. They just believe once you start selling, we already have a swing guy. They don't know the reason why that swing guy is confirmed. That is what some people don't know. And you see this particular one, I actually did not make a video about it on YouTube. I will save some for my students. Just like even if I'm dishing out values on Twitter and all, I will still save some for those that are paying for it. That is how it is. So we have this swing guy, and what did you see? Yeah, to correct one particular notion, I saw an interview where someone was like, "There is no way I'm going to teach you everything I know. I don't care how much you pay me." That is fallacious. Actually, it's based on individual differences, and it's based on the kind of person that person is. Right? If I want to teach you, the reason why I started charging for mentorship is because of how unserious some people are. If not, it was always my classes were free. As at 2022. You can ask people that knew me back then, Crypto Village. I would just be like, fine, Crypto Lord, send me 20 people, let me teach them. Most of them are influencers and top traders today on the timeline. They learned for free from me. 90% of them, you see them 40,000, 50,000, 60,000 followers on Twitter. Most of them learned for free from me. Just like how I've been sharing my trades now for free, and only few people are taking it on Telegram, right? I don't actually expect any NIQ students to be taking my trades. I don't want that actually. You can see my chart and use it as guideline to take yours. But I don't want any NIQ students to be dependent on my trade. That is why I will never drop any signal in NIQ group. Never. So that when you pass programs, you do many withdrawals and everything, all glory goes to you and God. You can appreciate me for teaching, but it is 100% your efforts. It's not when you will not take my trade, then you pass program. I'll be there posting it and praising you. I did not even know you took it. It was my trade. That's why I love seeing most of you guys chat on those winning trades and all that. And I'll be like, yes, this particular pair, this one pulls, I no trade, and this entry, it looks like my entry, but he got his own entry. Perfect. That is what I want to see. I want to raise independent traders, not traders that will be dependent on me forever. It's some people that want that one. Me, I don't want that one. Which one is I'm going to teach you so that you will be dependent on me and you will keep coming back? Coming back to do what? To give me more money. I'm making money from trading already. Sorry. So most people want to trade from this swing guy. Why? Because of this break of structure. But it is an internal structure, and price has already taken it out. This is the main structure where it started from, which is why this high failed. And when it failed to do it, it failed and gave us what? A new higher high. It is just a normal sequence. Price is in an uptrend. After this break of structure, we confirm our swing low here. You see how important understanding range liquidity is. It is going to help you identify areas where you shouldn't even be buying or selling from. If I want to actually buy from these points, I must make sure I'm buying from these points when price has not tapped into discount levels yet. But the moment price has already tapped into discount levels here, this becomes a trap. Because I will enter, my stop loss is going to be above here. That is the liquidity price is using. Look at when price wants to take out the liquidity. See the kind of big candle it's used to take it. Look at it. No mercy, just boom, straight. First, it tapped into it, gave you small profits. You are jubilating. Then boom. Why? External range. Outside the range. All these ones, internal range, inside the range. Let me look for a pair that is in a downtrend to round this all up. Let's see. Here's the CHF. This one is bullish already. Let me look for the past where it was bearish. Okay. Let's use this one. Now look at this. We have range high, range low. This is a very nice high. Another one, another one. Right? So what did you see price do? Price went up. Take out this internal range. Those that are trying to buy from here, where's their stop loss? Just above here. And what did price do? Price took them all out and respected this level, this base, rally base drop, right? So price respected this base here. And after respecting the base, while it was going up, the substructures were printing what? Substructures were printing this. Another internal range. Internal range again. Internal range. Take note, everybody's stop loss is below here, below here, below here, right? Now, don't forget, some people have already taken this to be what? To be that change of character. USD CHF is now bullish. And where we did, most of them, extreme PUI, they want to buy from here. So when price take out this stop loss, internal range liquidity. When price take out this stop loss, internal range liquidity, take this one out, internal. Those that are buying from here as well. Sorry. Those that are buying from these points, their stop loss below here, right? It is outside the range. This is their stop loss outside the range. What did price do? Boom, took them out. External range liquidity to give us what? A new lower high, a new lower low. Sorry. Why? Price is in a downtrend. This is how price moves from internal to external range. Simple. So, excuse me, let me check the comments. So I don't understand how we are now to trade this. Now listen, how do you trade this? You need more information. I'm just showing you and helping you identify internal and external range liquidity. This is why the class comes in section. When you are able to identify it, the next thing you are going to ask, okay, since I've identified it, where will I want to trade from? That is why after we are done with liquidity, the next thing to talk about is POI selection, where you will now want to take your trade from. It is a step by step thing. You don't just wake up and decide to trade with internal and external range liquidity. What are you trading? It is just to identify them, know where they are, know the one that price is likely going to take out next. And after that, we move into POI selection. Now, the simple assignment here is this. It's going to be a very simple one, a very, very simple assignment. Identify oh, okay, let me use a better word. Spots how price lifted and take out internal range liquidity. To external, sorry. Spot out price created and take out internal to external range liquidity. It's simple. Just go to your charts. I want you to identify your range, right? Then identify areas of internal range where price actually took out internal range liquidity and our price took out what's the external range liquidity. All you just have to do is use your color to external range. Okay, we shorten it to RL, external range liquidity, ERL, and you spot internal range, IRL. So internal range liquidity, external range liquidity. I want to see how you're able to identify this on your charts, because when we move further, you'll be able to understand how to actually use this. It is very, very important. But for now, learn how to identify it on your own. So don't use the examples I've actually used in this class. Find it on different pairs. Okay, somebody said I purchased an account and no login details since. I'm talking to the CEO. They migrated to their own MT5 today, right? So I think they're trying to make sure all logins are like on MT5. Yeah. But at the same time, just text support and let me know what support said, okay? Let me know what support said. Just text it, tag me on the group and post it there. But everything is going to be sorted out within today. It's actually better because most people have been like, we want MT5, we want MT5. And trust me, I prefer Match Trader because for firms, so I would even advise you to use Match Trader because whenever you are trading on Match Trader, I think Match Trader shows you your potential loss even before it actually happens. Like it helps you calculate your position size and all that automatically more than MT5. But MT5 is good based on the interface and everything. So MT5 is back on good funded trader. So and again, MT5 executions and everything is actually very, very nice too, both taking partials and things like that. I will advise you, don't go for instant funding. Don't follow shortcuts. Shortcuts can be deadly. Buy a challenge account. Force your find a way. Days are gone where prop firms are for professional. Prop firms now, for me, prop firms are for newbies because it is going to help you learn how to be disciplined. If you are disciplined enough to follow prop firm rules, right? Whenever you fund your account, just imagine it to be a prop firm account that if you go below like this, so they will take the account back. So with that, you are not supposed to do what? Go all in, like increase lot size, all those kind of things on your personal account. Somebody that traded prop firm for your very, very is good funded now. Yes, real MT5, not platform 5 is also MT5, but it is the web version. But this one is on real MT5 on MT5 MetaTrader 5 app. Yes, I explained mitigation during the last class. But don't worry, when we talk about POI selection, we'll talk about POI mitigation and everything. Somebody asked this mitigation during the last class. I explained it, right? So good funded is going to be the reason why I said good funded Funded next is very good. But funded next created something new now. I think they made it last week. They did not announce it before. The reason why I even rate them more than good funded is because they don't have news trading. There's no restrictions for news trading, but now they do. Any trade you open in the first 5 minutes before the news, let's say news is 1:30. If you open any trade around 1:25, they are going to, I don't know, it's there's a restriction there. It's either they are going to give you a warning and take any profit you make during that news. 5 minutes before the news and 5 minutes after the news, there's a restriction. Why good funded? 4 minutes before the news and 4 minutes after the news restriction. So good funded has lower news tolerance than fundedness. I think good funded is even 2 minutes. Crypto no get profit. You can trade BTC USD and yes, good funded is 2 minutes. It's still 2 minutes. They've not changed it. Sorry, it's funded next that is 5 minutes. Good funded is still 2 minutes. Somebody said confirming swing low and swing high is becoming confusing again. No. It shouldn't be confusing no, at all. It should not be confusing. Let me show you. This is a swing high, swing low. Simple. Let me go to gold and show you another one. Let's go to gold. I think last session, in fact, just go to last two session, the class. I spent almost, I think I spent about 15 minutes explaining swing again. I backtested gold properly. From this point, I was busy explaining the swing high and low. From this point, swing low, swing high, swing low, swing high, swing low. I think swing high here, swing low, swing high. Then from here, swing low again. We have this swing high, swing low. Then I think this one from this point now to this point, swing high. Why? Because there was no change of character up until this point here. So what confirms your swing high is the change of character. What confirms your swing low is the break of structure in an uptrend. Break of structure. Once you see this break of structure here, swing low has been confirmed. And when you get the change of character, swing high has been confirmed. Simple. There is nothing too complicated there. All right. What if you have a running trade before the time? Must you close? No, if you have a running trade, you don't have to close it during the news. Just let it run after the news, then you can now close if you want to close. But once it's the news time, their rule is once it's news, don't do anything. If you have a running trade during news, leave it like that, let it run through. Go to the website. We support reply. Go to the website, you will see contact us. Type search live support. Live support there will reply you fast, or you send them an email. But I'm pretty sure you should get your login and everything before tomorrow. What if you hit TP during the news? That is where this thing, Funded Next, is going to remove the profits. Funded Next will remove the profits. I think Good Funded is also going to remove profits. Yeah, I think so. Consistency score. I think that is on what's it called? That instant funding, which is why I don't advise you to do what? To trade that instant funding. Why? That consistency rule is applicable to only professional traders because these are people that they can just like me now, I can risk 4 to 5K on a particular trade. Yeah. And if I risk 4 to 5,000 on a particular trade, even if I lose two straight trades, my next one I'm still risking the same amount. My income, you're going to be seeing consistent 8 to 12,000 between that level, right? Same thing with what's it called? But when it comes to a new trader, let's say you take a trade, you win two. Let's say you take a trade now and you win like two trades because it's an instant funding account. You are now waiting. You will not be trading it small, 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 small. Let's say your first trade now you made $800, second trade you made $500. Then your third trade you are now opening and closing trade, making like $20 or $50. The bottom line is they are not going to pay you until that your consistent until you start showing consistent profits. That's why I advise you guys when it comes to that instant funding accounts. I don't even care if it's going funded or any firm, avoid their instant funded accounts. I don't care if it is good funded, funded next, any firm at all, instant funding, avoid it. Take a pro firm account like a normal trader. If you cannot pass their challenge phase, it means you are not ready yet. Take a pro firm like a normal trader, trade their challenge phase and try and pass. Once you pass, make sure you try and withdraw. That makes you a trader. That will be all for today. I'll be seeing you guys on Wednesday. And please do my assignments. It is very, very important. I'll be seeing you guys on Wednesday. What's the difference between range and swing structures? They are the same thing.